How quickly things change. Just when you thought nothing could stop the dollar from falling further, it's trading near a 3-month high against the euro after spending most of 2009 in decline. Sara Eisen is here to take a closer look at the dollar's about face.
Dollar's back in vogue, Erik. Last week was the dollar's best week since all the way back in April. Now, it wasn't too long ago, as you said, when the dollar seemed like it was pretty much in free fall. 2009 was the perfect storm of economic, financial, political factors, all leading to the dollar's decline. It fell about 17% in just 7 months. But come December, we saw something a little bit different, what Dennis Gartman is calling a watershed shift toward the dollar, a fast and furious rally, dollar managing to claw back about 5% of its declines in just 3 weeks, on top of a more upbeat Federal Reserve, much better U.S. economic data, and some serious sovereign credit concerns from Europe. Now, banks are rushing to upgrade their targets for 2010, but Stephen Pearson at Bank of America Merrill Lynch in London is not one of those. He has been predicting dollar strength. He also correctly predicted dollar declines last year. He's joining us from his office in London. Stephen, great to see you.
Hi there.
Hi, Stephen. Let's just get straight to 2010. You predict the dollar will come back, at least against the European currencies. Why?
Absolutely, yes. We're forecasting a relatively narrow recovery in the dollar through the course of 2010 as markets start to differentiate a little bit more between currencies that have a fundamental reason for quite strong performances against the dollar through the course of this year, and those currencies that have really rallied on the back of excess global liquidity. And in that group, I'd certainly put the euro, but it would be joined by the British pound and the Swedish krona as well. I believe those currencies have really rallied on the back of not being the dollar and some very specific flows that I don't think will repeat through the course of next year.
Stephen, Erik Schatzker here. We didn't just see the dollar decline against all other major currencies in 2009. We saw this very close negative correlation with perceived risky assets such as equities. That's begun to break down as of late. Do you think that's a trend that will continue in 2010?
Absolutely. Certainly our recovery for the dollar forecast is not predicated on risk aversion. It's predicated on the type of correlation break that we've started to see come through in markets over the last month or two. I believe that the dollar can recover on the back of stronger global growth. I believe that the dollar came down through the course of this year as markets put through the positioning adjustment to the improved economic scenario. But with that positioning adjustment in terms of the flight back into risky markets, the removal of the safe haven bid to US markets, with that positioning adjustment largely complete, I believe the dollar can now start to benefit from improving US fundamentals.
Stephen, exit strategies has become a hot topic in foreign exchange through the end of this year, and looking ahead into next year, how will that play out in the foreign exchange market? Who wins, who loses?
Yeah, it's going to be a very interesting year for monetary policy as a driver of foreign exchange, because of course we have to focus on both unconventional and conventional policy easing. Certainly for the most part of the coming year, we believe focus will be on the unconventional policy tightening that the Federal Reserve will have to put through to really lay the groundwork for what we expect will be the interest rate cycle commencement in 2011. So how do currencies react to that? Well, we don't have a test or a rerun, a pre-run of this in history, but my expectation would be that the dollar will benefit from a tightening in global liquidity, and that will be something that the Federal Reserve drives, but also something that other central banks, both in G10 and emerging markets, drive as well. I believe the dollar will benefit from that, and then increasingly as we get through the second half of next year, we'll start to see markets focus on a conventional policy tightening, and at that point I believe the dollar's rally will start to broaden.
All right, Stephen, thank you very much. That is Stephen Pearson of Bank of America Merrill Lynch.